In 2008, one man saw the end of the world coming. While the entire financial system was dancing on a volcano, he bet against it all and won. Now, he's doing it again. As of late 2024, Michael Burry has placed massive, leveraged bets that everything is about to collapse. But this isn't about housing. This isn't 2008. He's betting against you. He's betting against the S&P 500. He's betting against the NASDAQ. He's betting against the entire market. The question is, what does he see this time? This isn't just about his latest SEC filing. This is about his playbook, the 3 core principles he used in 2008 that he is using again right now to position himself for the next great crash. Because to Burry, this isn't a gamble, it's an inevitability. Principle 1. The I see it first principle. Michael Burry's entire legend is built on one simple habit. He reads the fine print. In 2005, Wall Street analysts looked at graphs. They listened to shareholder calls. They read summaries. Burry read the source code. He personally sifted through thousands of pages of individual mortgage-backed securities. He was the only one who actually read what was inside the bonds. He didn't just think the housing market was a bubble, he proved it. He saw the adjustable rate mortgages given to borrowers with no income. He saw the ninja loans, no income, no job or assets. He saw the fraud line by line, while the rest of the world saw A-rated securities. So, what data is he reading now? While the media is obsessed with AI and record-high stock prices, Burry is looking at the foundation, and it's cracking. He isn't looking at PE ratios. He's looking at hidden data. He sees consumer credit card debt exploding past $1 trillion, with delinquency rates spiking faster than they did before the 2008 crash. He sees auto loan defaults surging, especially in the subprime category. Sound familiar? He sees zombie companies, corporations that don't even earn enough money to pay the interest on their debt. They only survive by taking out new debt. This isn't a small problem. By some estimates, zombies make up over 15% of the entire stock market. And, most importantly, he sees the greatest concentration of risk in history. The entire market rally of 2023 and 2024 wasn't a rally. It was a handful of companies, the Magnificent Seven, pulling the entire index up with them. Burry sees this not as strength, but as a fatal structural weakness. It's a skyscraper balanced on 7 pillars, and he believes those pillars are about to buckle. His massive short position isn't a guess, it's a conclusion. It's based on data that everyone else is either too lazy, too optimistic, or too scared to read. That is Principle 1. Principle 2. The high-conviction asymmetric bet. When Michael Burry finds a crack in the system, he doesn't just dabble. He doesn't diversify. He takes a crowbar and tries to break the whole thing open. But he does it with a genius structure. It's called an asymmetric bet. An asymmetric bet is one where the downside is known and limited, but the upside is exponential, almost infinite. Think of it this way. He doesn't bet on a 50-50 coin flip. He waits for years until he finds a special coin. It costs him $1 to flip, but if he wins, it pays him $100. How many times would you flip that coin? In 2008, his coin was the credit default swap. Everyone thought he was insane. He was paying millions of dollars in premiums to insure bonds that everyone knew were as safe as cash. His investors were revolted. They were losing money every month, but Burry understood the math. His maximum loss was the premium he paid. If he was wrong, the fund would lose, say, 10–20%. But if he was right and the entire system collapsed, the payout would be 500%, 1,000%, 2,000%. He was risking pennies to win a fortune. Now look at his positions today. It's the exact same structure. Burry has repeatedly taken massive positions in put options against the SPY and the QQQ. A put option is the 2025 version of his 2008 CDS. It's insurance. He is paying a relatively small premium for the right to sell the market at a high price even after it has crashed. Let's break this down. If the market keeps rising, he's wrong. He loses what? Only the premium he paid for those options? A small, calculated, acceptable loss. But if he's right? If the AI bubble bursts? If the consumer debt crisis triggers? If those zombie companies finally go bankrupt? And the S&P 500 falls 30%, 40%, 50%? His payout isn't 10% or 20%. It's astronomical. He isn't shorting one or two stocks. He is shorting the entire index. He's betting against the consensus. He is making another high-conviction, asymmetric bet. It's the 2008 Playbook, page for page. Principle 3. The ignored asset hunt. This is the part of the playbook almost everyone misses. Michael Burry doesn't just bet against the bubble. He simultaneously bets on the things that will survive the crash. He hates hype. He despises it. So while the entire world is chasing the same shiny objects, AI, tech, software, Burry is digging through the trash heap. He's looking for the boring, the dirty, the essential. In the late 2000s, while everyone was flipping houses, what was Burry buying? Water. You heard that right. He started investing in water rights and farmland. He recognized that no matter what happens to the economy, no matter who is president, no matter what stock is popular, humanity must have water and food. It was a bet on reality. Now look at his playbook from the last few years. In 2021, when supply chains were breaking, he wasn't complaining, he was investing. He bought stocks in cargo shipping companies, recognizing that the cost to move physical goods was about to explode. He was right. In 2022, while everyone was panicking about inflation, he was buying energy stocks. He knew that inflation is energy costs. In 2023, he was buying companies in the forgotten industries, healthcare, financials, and, yes, more energy. This is Principle 3. It's the other side of the coin. His playbook isn't just short the bubble. It's short the bubble and go long on reality. He is positioning for a world of high inflation and high chaos, a world where financial assets, stocks, bonds, digital dreams collapse under the weight of their own hype. But real, tangible assets, the things you can touch, the things we need to survive, explode in value. He's shorting the fantasy and buying the plumbing. Conclusion: the playbook is clear. So what is Michael Burry's secret playbook? It's not a secret at all. It's history. It's discipline. 1. He reads the original data that everyone else ignores. Right now, that data screams that the consumer is breaking. 2. He makes massive, asymmetric bets. He buys insurance on the system, risking pennies to win dollars. Right now, that insurance is in the form of put options against the entire market. And 3, he buys the boring, tangible, real assets that everyone has forgotten. the energy, the commodities, the necessities.
The maverick investor
Michael Burry
isn't
isn't a prophet. He's not a fortune teller. He's a historian. He's an accountant. And he's a realist. He sees that debt is too high. He sees that speculation is rampant. He sees that the foundation is cracking, just like it did in 2008. The question is not if he's right, but when. He has his playbook. He has placed his bets. The real question is, what's in yours?